So we are continuing in this series of the different payment options in the Deferred Retirement System pension plan. We previously discussed in the earlier video option number 1, which is the highest payout. But now for those who have beneficiary needs, for those who want to make sure the loved ones are covered, you would have to go to the other 3 options, 2, 3, or 4. Now, just to confirm, all these options, whether it's 1 through 4, is a lifetime payment to you. However, what we're going to discuss is how it affects your beneficiaries, because each one is different and each one is irreversible. So once you choose it, it's for life. You still get a payment. However, it will be a reduction, and there's terms and regulations on what your beneficiaries will receive and how much. So now we're going to discuss option number 2. This is a 10-year guaranteed period, which means is when you receive your pension, and if you chose option 2, your pension would be reduced by a minimal amount. Very small, hardly even noticeable. But you're only buying 10 years of coverage. And the time starts of that 10 years from the day you retire, not from the day you pass away. And that also includes if you enter drop. Some people don't think that. They may enter option number 2 and they're in drop. And they said, oh, when I leave, I have 10 years left. Actually, you don't, because the 10 years started when you retired, technically, when you entered drop. So if you stay in drop the full now 8 years and you exited, you would only have 2 years left of coverage because the time started. Now, what would your beneficiaries receive in option number 2? They would only receive the pension check you're receiving, because it is a reduced amount, but they would only receive the remaining months. So let's create a scenario. Let's say you're in option 2 and you're 6 years into it and you pass away. Your loved ones would receive your pension check for the remainder of the 4 years that are left in that 10-year period. And then in year 10, it would stop. Well, what if you only live 9 years and 11 months? Well, you are correct. Your loved ones would receive 1 month check. They only receive your pension if you pass away in the first 10 years, and they just get the remainder of those months. Well, what about you? Well, your check continues for life. So if you were to live, and everyone wants to have a long retirement, and you live past those 10 years, which is everyone's goal. Well, once you pass those 10 years, your check continues for life, but it has been permanently reduced by the amount, and no further benefits are payable if you were to pass away because you passed the 10-year window. So in this option is something really to consider. 1 is mortality. If there's health issues or life expectancy, it may be something considered. But if you're healthy and you plan on living a long retirement and you plan on living more than 10 years, oftentimes it would be cheaper to do, let's say, a life insurance policy to cover it, because then if you were to pass those 10 years or you were able to go on, you could always extend it. You could always pass it on to somebody else. But option 2 is only for those 10 years. Now, who can you name as a beneficiary? Well, in option 2, you can name whoever you want. There's no rules or regulations because it's just a set amount for that time period. So that's another reason some may choose this, is because they may want to name a child. They may want to name a family. But option 2 is the only of the options that would allow you to do that. And so they would choose this just in that case. So option 2, just as a recap, is a 10-year guaranteed period. It is a reduction in your pension. You still receive a pension for your lifetime, but your loved ones are only able to receive a monthly benefit if you passed away in that 10-year window starting from when you retired. Either when you retired or you entered drop would start that 10-year timeline, and they would just receive the remaining months.